Hello and welcome to our weekly video. My name is James Hughes, Chief Market Analyst here at GKFX, and as always I'm joined by Peter Tuchman, NYSEinstein, live from the New York Stock Exchange. Peter, nice to see you. Let's get straight on with the first question. Now, last week was heavy data week. We had the Fed, we had the jobs report. What do you think this data means for the market? And after that bumper jobs report, are we nailed on for this June rate hike as the probability seems to insist?
This, ladies and gentlemen, was a blowout jobs report. The underemployed number went down. The earnings for the individuals who are working did go up. And we added 211,000 jobs. Super, super strong. We've had a big week with economic data. We had the Fed speak midweek. While they talked about the potential, the fact that economic activity seemed like it slowed down, it still felt that we were on track for a rate hike, okay? Earnings have been super solid, okay, across the board. And so this market, as I said, the Dow Jones Industrial Average is closing at 21,000 here, okay? While there have been pressures on the market all around otherwise, this economic data is significant. The jobs report is a number that, you know what, you don't know me that well yet, but I talk about the fact that the market will engage different things in a given day, whether it's oil, whether it's gold, whether it's the Fed, whether it's geopolitical and whatnot. Right now, no matter what, and sometimes under the Trump administration, we've not been engaging anything that's negative. And we've not been engaging what seems to be normal. But at the end of the day, net jobs reports are always significant. Today was a blowout number. So we are on track for a June raise. This market does seem strong. All good.
Now, as well as all that big data that we saw, the Fed, the jobs report, we also saw this rout in commodity prices. We saw oil prices fall incredibly hard. A lot of stories going on around that oil price. Where does the oil price go next after last week's big fall in prices?
So we've seen over the last couple of months that oil had bottomed out at the 45 level, ran back to 52, 53 level. We've seen a lot of geopolitical stuff affecting it, coming out of Iran, coming out of Russia, coming out of Saudi Arabia. Last week, what significantly broke this market down severely were inventories numbers that came out, Saudi Arabia talking about just pumping oil into the market. And what apparently is the most significant part of this is that the United States is pumping oil like there's no tomorrow. Break-even price for us is around the $44, $45 level. So as we approach it with the pressures of the geopolitical and what's going on in Saudi Arabia as far as pumping oil goes, we tend to pump more, okay? And the price has been breaking down. So oil was going down $1, $2 a day, basically. But what happened at the end of the week that seemed significant was above 45, we were pumping oil severely, okay? We closed down $1.25 at the Thursday of last week. After hours market, it actually broke down another $2.50 below the $44 level. This sort of signified a real bottom. Basically, when we break below break-even point on price, not only the oil producers and the pumpers start maybe getting into the market, but it felt like a double bottom. It felt like a technical level to get into the market. While we are coming into a quiet season market-wise, we are coming into a potentially good season for oil as a summer. It's a time where Americans basically tend to take their vacations and travel. So, you know, I think it's really important when we watch these markets start to break down and we get to a point where it's just a blowout day where we're down 2 and then we go down another 2. 44 seemed, I think it actually broke below 43 in after hours trading. Definitely signified a double bottom. On Friday of last week, we did have a turnaround after that evening, and we ended up that day up 91 cents above the 46.25 level. So, you know, maybe that signified a bottom in oil. Maybe not, but I really think that we're firming up in that level.
As you say, there are a lot of geopolitical stories which really do move that oil price. But with those geopolitical stories and everything else which has been moving things over the last week, what's on your radar for this week?
I think it's interesting to note that there is this old premise here on the stock exchange: sell in May and go away. That has not really particularly worked over the last number of years. I think there was the campaign year of last year, the year before, and whatnot. There's been so much going on worldwide, geopolitical and whatnot, economically, that old premise of sell in May and go away has not particularly worked lately. I'm not sure it's going to work now. As I mentioned a minute ago, this level of 21,000, which I didn't know if we were going to get back to for a while. A couple of weeks ago, we were at 20,500 on Dow. NASDAQ is staying at all-time highs on a daily basis. Spiders are off about maybe 5 points off their highs. And this market seems to be consolidating at a level where, while I thought the downside risk was the higher one, it turns out that this market just feels like it wants to go higher. So what's on my radar is to really, I think we're in new rules mode. A lot of the things that people, Brexit, they thought the market was going to go down. It did, but it rallied back. Trump win, they thought it was going to go down, but the market's gone up 3,000 points. So I think we're in new rule mode. I think we need to reverse our normal thinking and realize that what we normally play, by what rules, we have new rules. So that's what I got for that.
And finally, earnings season is still rumbling on in the US. On the New York Stock Exchange, it should be incredibly busy at the moment. What are the big earnings stories coming up in the next 5 days or so?
So the first tranche of earnings were banking. Second tranche of earnings were tech. Bankings were reasonable. It was maybe 90% were in a positive way, except Goldman Sachs. There was a little pressure on that, but net, banking was good. Obviously, there was anticipation of what was going to happen with the Fed and with the jobs and whatnot, but earnings were strong, and they didn't overreact to the potential fears of what was going on with upcoming news that happened at the end of last week, which turned out to be positive anyway. So banking sector was solid. The tech were obviously solid because NASDAQ's been closing at all-time highs every day since then. What do we have to look forward to this week is basically consumer staples, right? We've got earnings coming out in Macy's. We've got Nordstrom, some retail. We've got Priceline, and we've got Disney, okay? And we've got Whole Foods. So it's basically, these are things that retail's been under a lot of pressure since the solid e-commerce market has just taken over retail here, at least in big box stores in the U.S., and that seems to be a problem. Okay, Whole Foods, the food sector, a lot of M&A, a lot of positive stuff going on. While the margins have been shrinking down, I think that's possibly positive. We're coming into the summer now. Okay, so while we did see some consolidation and sell-off in oil, which we recently discussed, okay, and this could be a seasonally slow time economically overall, we did get the jobs report, which blew everybody away. That's going to lead to a June interest rate raise. And amazingly enough, this market is selling into strength. While normally an interest rate raise may put some pressure on the market, it has not been doing that. So we're talking about that new rule I've been talking about. Don't look at things the way we used to look at things. Kind of flip everything on their head. So that's where we're at for the end of the coming week. We do have the third tranche of earnings coming out. They are consumer related, but net at the end of the day, this Dow Jones market closing at 21,000 for last week. Things seem strong. Jobs number was strong. Earning anticipation is okay for the week. Interest rate raise coming onto the table. This market consolidating an all-time technical high. We're all looking good here. NYSEinstein, GKFX on the tape. Loving you all. Have a great weekend.
As ever, Peter, it's been a pleasure talking to you. Thank you very much for your answers, and we will speak to you next week. Guys, thank you very much for watching. My name is James Hughes, Chief Market Analyst here at GKFX, and we will see you next week. Thank you very much.